Hey guys, JC Peretz here, founder of AllStarCharts.com, and as always, I am joined by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
What is up, my man?
You know, a lot of charts, a lot of things moving. This morning was Wednesday morning where we have our analyst meeting, and one of the things we always like to do as part of that analyst meeting is come up with a good options trade that sort of represents the current market environment that we're in. And a lot of the stuff that we were talking about, the different names, nothing was really catching your attention because it either had moved too much or it wasn't ready yet. And then, but the NVDA, you like the NVDA.
Well, you hit it on the head there, right? I mean, there's a lot of stocks that we like and a lot of great setups. But for me as an options trader, more as a short-term options trader, I didn't like how a lot of them have already moved so much just off of Monday's low, and I felt like I'd be chasing. And we talked about it during our meeting. I don't like to chase. I want my setup, and I want it to come to me, or I want it to be in a good spot. I don't want to chase it. So we reframed our conversation. We're like, all right, well, you know, what's setting up for a big bounce, or you know, what's pulled back, and I don't remember if it was you or Straza who brought the NVIDIA up, but we pulled up the chart in NVIDIA, and we were like, yeah, this one's good. I mean, the premium's there. It's got a lot of juicy premium. Yeah. It had a hard hammer on Monday with the follow through yesterday. So we like this one.
Yeah, you know, I would argue that the candle I put in on Monday is even stronger than a hammer because, you know, a hammer tends to close near the highs of the day, near the open. This one extended that, even more bullish in my opinion. Filling that gap, by the way. You know, there's an old saying that all gaps get filled. No, it's not true. Not all gaps get filled. Breakaway gaps, by definition, do not. But oftentimes, you'll see those, you know, it almost acts like a vacuum, sucks that up, and then gets going. And then not to mention the momentum that NVIDIA has. Let's not forget that this might be the strongest stock, like, in the world. I mean, it's at least part of the conversation. When you zoom out, the move that this thing has made over years is, you know, I mean, very few stocks can be compared to this one. So the amount of upside momentum is uncanny. And I think you got a nice little, so obviously I think that the risk versus reward is great because if you fall back below that gap, all bets are off, right? So the risk reward is great. You got the relative strength going higher. Now, I figured a bull call spread made the most sense in this scenario. And you're like, no.
No. I mean, going back to your conversation there about how it's super strong. And yeah, I mean, even if you just look back over the past year, from March of last year through November of last year, so, you know, the most recent 12 months, this stock almost tripled. I mean, it had quite a move. And now we're pulling back, which is completely healthy after such a strong move, right? I mean, there's nothing about this downtrend that should get anybody really scared here. But I wanted to put a trade on that is more tactical. You know, I'm not insanely bullish for NVIDIA right here. I'm mildly bullish, if that's, can I say that? Can I say I'm mildly bullish?
Yeah, you don't have to be insanely bullish or insanely bearish. Like there's somewhere in the middle where you probably usually should be, by the way.
I'm not making the bet that NVIDIA is going to break back to new all-time highs between now and February expiration, but we chose February options. And in this case, you know, it's a shorter term trade. What we're actually, the bet we're making, JC, we've done this before, is that hard low that came in on Monday. We feel like that's going to stick. That's right around 260. It's kind of hard to see on that chart, but that low on Monday, intraday low, is right around 260. And the bet we're making is that's going to hold for at least a couple of weeks. And that's really all we needed to do, is just hold for a couple of weeks. The premiums in NVIDIA options right now are a little bit juiced thanks to that sell-off we've had. So it made sense to sell some premium. And the way we're expressing this trade, JC, is we didn't want to just do a naked put. You could do a naked put. Look, for those of you who have larger accounts and can stomach the larger margin requirement and can stomach just the thought of having theoretically unlimited risk, nothing wrong with just selling the naked 260 put. I don't hate that. For me personally, I'm a little uncomfortable holding naked risk in a stock like this. It can really move far in either direction if it wants to. I'm putting on the bull put spread. So I sold the 260 put, protected it with the 240 put at the downside. The whole trade, I was able to bring in 475 credit. I think it's still right around there right now. We put the trade on a couple hours ago. And all I'm betting on, JC, is that NVIDIA is going to stay above 260 for the next couple of weeks. And if it does that, or if it goes higher, we'll have no trouble profiting in this trade. My goal is just to take it off when I could buy this spread back for about 230, 235, which would be half of the premium I collected. I'm not being greedy here, JC. This is just a tactical hit it, quit it kind of trade. Just make that money and go.
So there are some trades that are low probability but can give you tremendous outcomes. And there are other types of trades that are high probability and give you a lower return, right? Not
Absolutely.
every trade needs to swing for the fences. We put
Absolutely.
those trades on, like the oil trade that's still going. Like those hero trades do exist. This isn't that, right? We're high probability outcome, not getting a zillion dollars, but making a nice little sum of cash. No?
Yeah, this is the kind of trade that if you put this trade on 100 times, you're probably going to make money in it 70 or 80% of the time, right? You might not make money every time, and you could suffer a max loss. Hopefully you won't. And by the way, I should point out that if we do see a close below 260, which puts our short puts in the money, that's going to be our signal to get out. We're not going to argue with this thing. We're not going to hope and pray. If it breaks Monday's low, if it closes below 260, that's my signal to get out. I'll exit the trade near the open on the next trading day.
When it comes to portfolio management, you always do a good job of sort of explaining, where this particular trade fits in an overall portfolio. Because in a lot of cases, people are long volatility, like if you own call options or for example, how would this trade specifically complement someone else's portfolio that is long stocks and long some premium?
No, it's a great question. So if you have a portfolio that's long a lot of stocks, or maybe you're just long a bunch of long calls or call spreads, in a market that we're in right now, where the market doesn't feel like it's really made up its mind whether it wants to continue going higher, we could see a lot of sideways action here. And when you have sideways action, your stock positions really aren't going to be doing anything. They're just going to be dead money. And any of your long premium positions are going to be slowly decaying away.
You're getting chopped up.
You're going to get chopped up. So having a trade like this where, hey, you collect premium, meaning if the stock goes sideways, that provides a little bit of balance to the portfolio. And it's always good to have a few of these on. I mean, we've talked about this in the past. I like to have, an iron condor or two on in an ETF or a few ETFs just to provide that balance for that sideways times.
And that's great. And you want to know something, particularly from an options perspective, I had never really thought of it that way. Like I never really thought of options as an asset class being a nice diversification against being able to make money in environments where the other stuff isn't making money, for example, right? And be able to do that simultaneously as part of an overall portfolio is not something I had ever thought and considered until I met you. When you talk about this all the time, the portfolio construction aspect of options trades, because some people are believing, oh, if you like NVIDIA, just buy the stock. Yeah, you can do that. There's nothing wrong with that. In fact, I like that trade a lot, particularly against the lows from December. I think are an even cleaner out on the equity side. On the option side, you want to let it dance a little bit, particularly with this strategy, but there's nothing wrong with buying the stock. If you want to buy the stock, buy the stock. If you want to buy a call option, buy a call option. This isn't those things.
Right. We're just making a tactical bet that NVIDIA's low of this week is going to hold, and we're going to make some money even if the stock goes sideways. Even if it goes down a little bit from here, JC, we can still win. Just don't break 260. That's all we ask. That's all we need.
And then what happens if you break 260? Let's talk about the risk management on the out. Right? So you wait till the end of the day for a close.
Right. So the most important price of the day, we talk about this all the time. The most important price is the closing price. We don't want to get stopped out on intraday noise. You'll be filled with regret more times than you'll care to admit. And with defined risk trades like this one, there's never ever really a reason to scramble for the exits intraday when you have a defined risk spread. So we want to see the closing price. As long, it could trade down to 255 intraday, but if it closes above 260, then we're holding. But if we do see a close below 260, let's say it closes at 259, 258, whatever, Then the next morning at the open, assuming it didn't re-gap higher, I'll be looking to exit that trade sometime early on the next trading day.
All right, so let's reiterate. We're selling the NVDA February 260, 240 bull put spread for about $4.75 credit. That means we're going to be in the normal February monthly expiration options, short the 260 puts and long an equal amount of the 240 puts, really to define our risk. And here's your P&L graph. And Sean, any final words of wisdom on this trade or life in general? Well, you're full of great wisdom outside of the options market. You're very zen, Sean.
Well, we've had an interesting few days in the markets. We had the sell-off, and we talked yesterday about how, boy, every time the market sells off 2%, everybody starts freaking out on Twitter and on TV. Tune out the noise, guys. Only price pays. Don't follow the talking heads on the TV. Trade your plan. Stick to your plan. If there's no trade, don't force it. There's no reason to freak out here, especially when you trade the way we trade with options and define our risks. There's never a reason to panic. Just stick to your plan. Over time, you're going to win. I promise.
You guys hear? Are you listening? Is anybody listening? Hello? He's right. Hello? What is it, like McFly, right? Hello. Listen to what he's saying. He couldn't be more right. Preach, baby. It makes me so happy to hear you say those things. You're absolutely right. People, and it's not easy, by the way, right? It's not easy.
Not easy.
No, it's not easy. It's in your own head. But all the things he's saying is right. All right, guys, listen, we got to go. I got a meeting. Adios. Thanks, Sean.
Yeah, take care, buddy.